So welcome everybody and thank you for coming along. What I'd like to start off is by recognising and acknowledging the traditional owners of the land on which we're gathering here today, which is the Gadigal people of the Eora Nation. Pay respects to their elders past and present. And thanks for coming along. It means a lot to us. This is our opportunity to share with you the potential merger, the why, and most importantly for you to ask questions of us. Back in February 2024, so almost 12 months ago, we entered into a memorandum of understanding with Bank Australia for the purpose of our proposed merger, and here we are 12 months later, pretty close to it coming to fruition, but most importantly, it is all about the member vote for Qudos Bank and for Bank Australia, and that's the beauty of being a customer-owned organisation that holds its members and customers truly first in the organisational bank value proposition. We did a lot of work, Damien and I, and our executive teams back in October, November 2023. We, Qudos Bank, spoke to 5 other of our peers in the top 10, one included Bank Australia. Then we went through a work around, call it due diligence, particularly with those organisations that we thought were aligned around our culture, purpose and values. And we spent 2 days together. I asked Damien if it was okay for us to spend 2 days together in Melbourne. So Damien and I with some of our executives and some directors, so we could test, most importantly, the alignment about culture, purpose and values. And so why would we do that? Well, the history of customer-owned banking and mutual banks and credit unions is about putting members first. We have 65 years of a long tradition of delivering to our members. Bank Australia has 69, 70 years, Damien. And so that's how we tested that this proposed merger would be the right thing in our members' best interest. Bank Australia also made that decision as well, and we entered into the memorandum of understanding. As I said, this is a merger of equals approach. I'll talk more about that. It's about members' best interests first, but there's also about looking after our employees as well, because they're the ones who deliver to you, our members. So the agenda. I've done the welcome. I'll do a merger overview. We'll talk through member benefits, talk about the employees, and then there'll be questions from the floor. Okay, Damien Walsh, Managing Director of Bank Australia. Great to have you here, Damien.
Thank you.
So you'll hear from Damien shortly, and I've mentioned merger of equals. So we'll give you some examples of why it's merger of equals, because by the numbers, Bank Australia is bigger than Qudos Bank. But I'll give some clarity through this presentation about what merger of equals is. But let me start with this one. Why are we proposing this merger? So this is what's happening in the sector. There is consolidation happening. It's been happening for some time. I'm pretty sure our members would be aware of this. And the consolidation is as a result of needing more scale to deliver, which means pooling resources to deliver to our members in the long run. So the numbers up there, the blue line heading down from 200 back in 2004, that's the credit union line, down to sub 50 to today. And then the pink one down the bottom is the credit unions that have become banks, mutual banks like Qudos and Bank Australia. And so you add those two together and we're sitting at 54 customer-owned organisations from a scenario where there was over 200 back in 2004. This is a positive story in around being on the front foot around consolidation to continue to deliver it to our members over the long run. Both Qudos Bank and Bank Australia are financially sound. Qudos Bank have been delivering to its members for over 65 years. We celebrated 65 years last year. Members here read our annual report and we continue to grow. And we've been able to do that through being competitive in products and services that we deliver to you, whether that be the deposit products that enable us to create mortgages for people to get into homes. So this story is not about financial soundness, it's about greater scale, pooling resources to deliver to the regulatory expectations, which is appropriate for a bank, and they continue to rise. This proposed merged bank will have $20 billion in assets, and that means, as far as the regulator is concerned, we're considered a significant financial institution. So the bar goes even higher. That's appropriate, but resources to deliver to that, whether it be around capital, humans, what processes, is significant. And we're getting on the front foot to continue to deliver in that regard. And the other piece is digital transformation, technology. The cost of that just continues to go up. So it's about taking a long-term view, continuing to support the members with the service that they've enjoyed from this organisation and the products over 65 years. So it's long-term member benefit, ensuring that, staying on the front foot, being in control of our destiny. The consolidation in the sector is going to happen. Better be coming together with an organisation that is aligned on purpose, values and culture, because that's what makes the difference in the long run. Our members have experienced our purpose, our values and cultures over 65 years, and that's why they continue to be with us. That's why new members come and join us, because they value that, and that turns up in how we serve our members every single day. Strong culture and values alignment, I think I've spoken about that. These organisations are absolutely aligned on that. And then the greater financial and operational capacity. So this is the theme that I'm talking about, the regulatory expectations, pooling resources to get the job done, so that we can continue to deliver to our members in the long run. So the Qudos Bank Board, and the theme of merger of equals I'll get to in a minute, but the Qudos Bank Board I've already touched on. This is a proactive strategic choice by Qudos Bank Board, and Damien will talk about the fact that it's a similar scenario for Bank Australia. So, we'll talk about the process a little bit later on. Should this merger not be supported by our members, and that's the beauty of being a customer-owned bank, we have a proactive strategic choice to come together with another organisation. So we'll come back to what that means down the track as far as the process goes, but this is a proactive strategic choice endorsed by the full board of Qudos Bank, and Damien will talk about Bank Australia in a minute, to ensure that we can deliver to our members in the long run and be in control of our destiny. So why Bank Australia? So Bank Australia shares our commitment to the history, the values, the products and services, and that's come from alignment around culture, values and purpose. Customer owned and put members first. So we will continue to be customer owned, full stop. No float. This is not a takeover, no IPO. We will be customer owned, full stop, and that is the strategy of the merged entity. Building a better bank for our members. So bigger is not necessarily more beautiful, but having more scale and pooling resources enables us to be a better bank in the long run, and Bank Australia share the same views. And then I've talked on this enough. I think the strong cultural and strategic alignment is critical to the proposed merger coming to fruition. So over to you, Damien.
Cheers, thanks Brendan. I might just pick up a couple of themes from Brendan first of all before I step into the Bank Australia story. The reality is it's getting harder and harder to compete as a small bank. In addition to the areas that Brendan touched on in terms of increased regulation and an increased requirement to invest in technology and digital services, the realities are that our interest rate margins are contracting, and we operate in a competitive environment. In addition to that, all of our costs are going up. So think about the inflationary pressures in your own life and that cost of living crisis. When you're running a small bank and all your suppliers are putting up their costs, your wages that you're having to pay for your staff are going up, you absolutely need scale to be able to absorb those cost pressures. So that's also a part of that consolidation story that Brendan touched on earlier. We are two values-aligned bank. We are committed to customer ownership. Both boards have made it very clear that they've no interest in listing on the stock exchange, so no demutualisation. Our commitment to customer ownership is enduring, and the reason for that is it goes to our competitive advantage. It's how we differentiate ourselves in the market in terms of making sure that our customers are at the centre of our decision making, and not maximising returns for external shareholders by paying dividends to large institutional investors. So I'll take a bit of a breath on that and share a little bit about my story and the Bank Australia story. So I've worked in the industry for quite a long time, probably getting close to 40 years, and started in this organisation back in 1997. So I joined a credit union in Melbourne, in Victoria, called Outlook Credit Union. Outlook Credit Union was the former Ansett Employees Credit Union. And we served the Ansett family in the community proudly, in many ways very similar to Qudos' heritage as Qantas Staff Credit Union. As you know, Ansett collapsed a few years later in 2001, and with the benefit of hindsight, I'm so glad that they merged beforehand, because it wasn't just Ansett, the company, that collapsed, but it was a number of their supply chains and other related industries. And if we were just stuck with a single employer group, that could have put the credit union back in that day at risk. So we actually went through a three-way merger in 1998 with SEC Employees Credit Union, or Enterprise. So that was the State Electricity Commission, so the energy sector in Victoria, and the CSIRO, which came out of the science community. And it's that CSIRO heritage that is our continuing legal structure today. We've got a very, very similar heritage and very similar culture, to the point where when we spend time in each other's business, and we spend a lot of time in each other's businesses, we've reflected on the fact that how strongly aligned the values and culture are, to the point that it feels like family. So I walk into the Qudos offices, engage with the staff, and it's exactly the same level of engagement as we have at Bank Australia, and vice versa. So, it's been a really wonderful thing about, how we bring together two like-minded organisations. And to your earlier point, it's not a takeover. It's not about how it operates in the listed space, where one company acquires the asset, acquires another company, strips out its costs, sacks its staff, reduces its services to customers, and maximises its return on investment to shareholders. That's not how it's done with credit unions and mutual banks. So we're coming up to nearly 70 years in 2027. I'll have been 30 years with the bank by then, and we're approaching 12 billion in assets, so roughly twice the size of Qudos Bank. We do contribute up to 4% of our after-tax profit into an impact fund, and on the right-hand side are the pictures of our four main areas where we invest money on behalf of our members, and also collaborate with companies who bank with us, who are delivering on services around nature and biodiversity, action on climate change, First Nations recognition and respect, but also access to secure and affordable housing. So we've got a long history of providing funding into specialist disability accommodation, into aged care, into social and cooperative housing. So it's a one way that we evidence our values as an organisation. And I'll go back to that earlier comment about being customer owned, that linking between our heritage and our ownership to how we want to have a positive impact for people and the planet as we continue to grow our business. And as you commented, as a significant financial institution approaching $20 billion in assets later on this year. Just to put that into context, Bendigo Bank is around 100 million. So we in assets, so we'd only be about a fifth of the size of them. We'd still be a small bank. So it kind of sounds big, like 20 billion in assets, but Australia's largest bank, the Commonwealth Bank, is 1.2 trillion in assets. So that gives you a sense of the scale difference between a large bank and we will still be a relatively small bank, but importantly customer owned, and with a focus on driving benefit for our customers. So maybe I'll talk a little bit about what we would look like coming together. So we have about 200,000 members. Qudos Bank has about 100,000 members. Combined membership would be around 300,000. Importantly, we've got about 600 employees. Qudos has about 300. Is that we need all of those employees to service our 300,000 membership. And we'll talk about the employee component later. But we have guaranteed jobs for all of our employees. We need them. We need all hands on deck to be able to service the larger membership and benefit from the scale opportunities that are in front of us. And that number of 17.5 billion, that's backward looking. That was our annual report figures from last year, but with strong growth on both businesses. We will be approaching 20 million by the end of the calendar year. So I might leave it at that and then pass back to you. And
thanks, Damien. Okay, so how will the merger benefit our members? So I've touched on these, but I'll go into a little bit more detail on some of the ones that I haven't touched enough on. So I've spoken about better, being stronger, being more resilient. This is what the proposed merger brings around pooling resources, increasing scale to deliver that. Enhanced products, reduced fees and charges. So when you get the member information booklet and to inform you when you're making your decision, there'll be a page that'll go, here's the Qudos Bank fees and charges, here's the Bank Australia fees and charges, and here's what the merged entity proposes to deliver to you, our members, should you vote yes. And so it's a best of both approach. So what we've done, merger of equals, best of both approach, has been the guiding principles for this proposed merger. Best of both means whatever is the best from Bank Australia, whatever is the best from Qudos Bank for our members, that will be taken forward for the membership. Whatever is best from Bank Australia for our employees, whatever is best from Qudos Bank for our employees will be taken forward into the proposed merged entity. So reduced fees and charges. Interest rates I can't talk about. There's laws. ACCC would be looking to chase down Damien and I if we give you any indication of what interest rates might do. But let me say two things. One, committed to a best of both approach. Two, we've got a track record of delivering competitive interest rates for our members, whether it be deposits or mortgages over 65 years, because we wouldn't have been able to grow to where we got to today if we haven't done that. And so when we can, should the members of both organisations vote yes, well then we get towards day one, then we can absolutely be absolutely more clearer about the interest rates for our products and services. But again, we need to be competitive. There's no use coming together and not being competitive, so we can continue to grow and continue to deliver to our members. And we've got a track record of delivering, as I said, to our deposit customers and to our mortgage customers, borrowing customers. So larger branch network. So we have 5, as our members know, and Bank Australia have 10. So we'll have 15 branches up and down the eastern seaboard, a couple in Brisbane. We'll have 1, 2, 3 in Sydney and 1 in the CBD. From day one, the members, should the merger be voted up by our members and Bank Australia members, from day one, the members of each organisation will be able to go into the respective branches from day one. So our members have given us appropriately a ton of feedback about when we had to close the CBD branch here in Sydney because of compulsory acquisition. And so should the merger be successful and the vote be positive, then there will be 15 branches across the country up and down the eastern seaboard for both member bases to be able to use from day one. So larger branch network, increased investment. I've touched on this. So the whole piece around technology, cyber security and fraud prevention. But let me give another specific example of, because the reality is that the piece about more scale pooling resources means that we need to continue to find efficiencies. And it's not through our people, it's through examples like this. Both organisations have just about finished or have finished putting in a lending operation system. Bank Australia used a provider, we used a different one. So those two providers will need to go head to head and pitch for the business of the merged entity, again, should our members vote yes. And in that process, that means a couple of things. One, we've both got new contemporary systems that are helping our people deliver to our members more efficiently and effectively for mortgages. Two, we know that they're contemporary, we've got good pricing, we're going to get even better pricing should this merger go ahead, and continue to deliver to our members more efficiently and effectively. And most importantly, our people will be able to deliver to them even more easier than what it is today. So there's a really tangible example of the benefits and what it means by scale through pooling resources. No job losses, but we get better at the way we do things as a merged entity.
Yep.
Shared values, I've touched on that. It's a commitment to being customer owned, but we've done an enormous amount of work, and I've spoken about this and so has Damien, about these customer owned banks being aligned around culture, purpose and value, so we can continue to deliver to the members in the way that you've enjoyed for 65 to 70 years. And then there's the increased scale piece, so I've done that. It's a commitment to pooling resources. It's not about being bigger, it's about being better for our members in the long run. Okay, so next, what's going to stay the same? So what you've told us and what you show that you love about Qudos Bank is going to stay the same. We will remain 100% customer owned, full stop. Qantas frequent flyer program will continue. So many banks have a Qantas frequent flyer product. No bank other than Qudos Bank has it across the core products of what we offer to our members. And so that will continue into the merged entity, should the vote be a positive one, from day one. No change to your current products. How you deal with Qudos Bank today does not change. No change to your BSB, no change to your account number, and the brand will continue from day one, as will the same be for Bank Australia. However, it is not practical, it's not efficient, and it's not good use of member funds to run two brands for a long time into the future. So after day one, and after a couple of years of bringing the organisation together, it will be up to the merged board and executive to do market research, brand research, and then come to the members and get their input about what a single brand may look like. But from day one though, Qudos members will get to deal with Qudos Bank as it is today, and same for Bank Australia members as well.
Yeah, so if you ring the contact centre at Qudos Bank, it's the same number. If you're using internet banking or the banking app, it's the same details, so that won't change on day one.
Yeah, that's it.
Yeah.
No closures of branches, full stop. We've only got 15, we need every one of them to continue to deliver to our members. 100% Australian-based employees will continue. So they're the key things that our members have said to us over the last 12 to 18 months that's important to them, particularly in line with the proposed merger. We mentioned about what does it mean for our employees. So we started off by no job losses. We need every single one of the 900 people that would be in the proposed merged bank to deliver to our members over the long run. We will continue with dual head offices. It's a decent sized customer owned bank. We'll have executives and teams based in 3 states. We've got a couple of people in some other states as well, but the dual 2 offices are important about running a strong bank, creating career opportunities, ensuring that we're delivering to our members in the long run. There's no job losses beyond the executives. So on that point, and we've got a slide coming later on where I'll talk about that in more detail, about what the executives have been through in the process we undertook to ensure we had the right leadership team. Comparative salaries and benefits, it makes sense. We need to ensure that we appropriately pay our employees, provide career paths and benefits for the long term, because they're the ones that deliver to you, our members. Employer of choice for more than 900 people. And the beauty of being a customer-owned bank is that our people as members, employees as members, get to have a say in the future of their organisation. That is unique. And that is that commitment to being customer-owned and also about doing the right thing by our employees as well. So increased career development opportunities. So let me give a couple examples. So our people don't need to move anywhere to stay in their job, but they can if they want to. So one of our team in Sydney might have a circumstance that partner or significant other in life wants to take a job in Brisbane. Well, the merged entity will be able to support that as an example. The roles that will be a part of the merged entity are significantly more diverse. There's more of them. And so an example, Damien mentioned before, we spent a lot of time in each other's business, hanging out through the different places we're located, whether it be branches, operation centres and contact centres. So this proposed merged entity will have contact centres and operation centre in Brisbane, branches in Brisbane, in Sydney, contact centres and operation centres in Sydney, 3 branches in Sydney. We've got a branch and an operation centre in Canberra, and in Victoria we've got branches across provincial, rural Victoria, in Bendigo, to Traralgon. We've got operation centres and contact centres in Traralgon area, in the Gippsland area, supporting that community out there. We'll have 160 people out there.
Yeah, I mean, I love the fact that we create employment opportunities in rural and regional Australia. We've got about a third of our workforce in regional Victoria. It's been fantastic to see people to be able to have meaningful careers, start their life living and working in the community rather than feeling like they need to move to Sydney or Brisbane or Melbourne to have a job, start a family, get married, buy their first home, but being able to have the lifestyle that goes along with being able to live and have meaningful employment in regional Australia. It's just a great part of the culture and the values of the organisation.
Yeah, you go visiting Traralgon Operations and Contact Centre, there's 140 people, I think, in there, or roughly. And 1 minute you can be talking to someone who's on the phone to a member, helping them out with a deposit or a mortgage. 1 minute you can be talking to someone who's approving, the risk managers who are approving the loans. The next minute you're talking to a marketing person. The next minute you're talking to helping our members with whatever issues they're having. The opportunity and the diverse nature of that, and that's in rural Victoria, is one of the great points of differentiation that this proposed organisation provides. From a board perspective, as I introduced before, we've got a couple of directors from Qudos Bank Board, and Steve Ferguson is here as well from Bank Australia Bank Board. It's a 50-50 representation. 5 directors from Qudos Bank, 5 directors from Bank Australia for the proposed merged bank. The chair of the proposed merged bank will be Jen DeLitz, our current chair, and the deputy chair will be Steve Ferguson, the current chair of Bank Australia. So 5 from each, 10 directors, the right size board to enable us to run, govern, keep the members' interests foremost and as a priority as a significant financial institution. The same story with the executives. We are going to be a bank that has a higher bar to appropriately meet, and we need to have the right capability across the board and the executive to continue to do that and deliver to our members in the long run. So the executive team. So we did this process some time ago now, back in June, July from memory, Damien, about getting on the front foot. They're called Executive Designate Team because this is all about subject to your vote. But we thought it's important to get this team in place so that there's clarity for both organisations, regardless of where it is, and our people, that this will be the team that's responsible for leading the organisation with the board should the members vote yes for this proposed merger. So we've got a good mix of people from both Qudos Bank and Bank Australia, based in Sydney and Melbourne. So we applied an independent process. Spencer Stewart, a recruitment crew, were involved, and these executives basically applying for their jobs. It was a robust process, interviews with Damien and I, psychometric testing, you name it. So they had been no other way to put through the ringer and have earned the opportunity to be a part of the leadership team for this, should this proposed merger go ahead. That's being responsible about ensuring that the members' best interests are kept as a priority, because these are the people, along with the board, that would lead the proposed merged entity. So we're going to go through timeline and next steps, and then we'll go back and start the Q&A session. So where we are, we're at point 1, which looks like the start, but it's not. I've already spoken about the journey we've been on to get to today, but APRA approval. So last Friday afternoon or evening, APRA supported the proposed merger to the Treasurer. So regulator supports this proposed merger. Next step is the Treasurer sign off. Now the Treasurer actually has to sign off on this, Jim Chalmers. If an election gets called before Mr Chalmers signs off, that will cause some delay. Doesn't mean it won't happen, it'll cause some delay. They go into caretaker mode and they don't do much other than focus on an election that's coming up, and fair enough. So we're working closely with APRA and Treasury Office about getting that sign off before our Prime Minister, because he's the one who knows when it's going to be and he's the one who'll call the election. So we'll watch this space. Member information booklet, so that's ready to go. Qudos Bank will have one, Bank Australia will have one. They're ready to go. They'll have in there all the benefits, the pros, and the cons or disadvantages. What's wrong? What could be wrong about this? What would I miss out on? It's about both sides. It's a balanced approach, which is also in line with the merger of equals approach. It'll include that slide that I put up there about the consolidation, because that's one of the drivers around coming together with another like-minded organisation. But right up front, it'll have what's in it for our members, because that's the most important thing, and you get to make the call on that. Member vote will open around, so let's assume we get sign-off soon. We're working towards a possible vote mid-April, possibly, but it's subject to the reasons I spoke before. So 4 to 3 weeks before then, the member information booklets will issue and the vote opens. Special general meeting is held, and that's done around mid-April for both organisations, and it's a special resolution because this is an important thing for our members and for both organisations. So what that means is that 75% of the members who vote need to vote yes from Qudos Bank and Bank Australia for this proposed merger to happen. So it's in that our future of these organisations, appropriately so, is in the future of our members and our people who are members as well, who will get the opportunity to vote. Online voting will close in the days coming up to the special general meeting, and then votes are tallied and people will turn up in person, and an outcome will be known pretty quickly. Then, should all that happen, it is proposed that the merged entity kicks off from 1 July. I'll throw to Damien, because you're an expert in this. Did I miss anything?
No, you're pretty good actually. So I might, because you mentioned cons, and I thought, okay, let's do that one because it's important. It's in the member information booklet. The proposed structure is that Qudos Bank would transfer its engagements into Bank Australia. The member shares in Qudos Bank would be cancelled and replaced with a member share in Bank Australia. What's really important about that is that your rights as a member don't change. So you get to vote on the critical things about your bank today, exactly the same after the merger. So you get to vote for directors, you get to vote for director remuneration, you get to vote for change of the legal name. So the legal name will be Bank Australia Limited, but if that was to change, you would get to vote on it, or any constitutional changes you get to vote on. And for those of you that have a paid up subscription price for your Qudos Bank member shares of $10, that subscription price will be refunded to you at the time of merger. And both, I think Qudos Bank have been issuing member shares since 2010 with no subscription price, and our members don't have any subscription price either. We refunded all of our subscriptions some years ago. Yeah. But we remain a mutual, customer owned, and this process doesn't lead to a demutualisation.
Okay, thanks, Damien. I want to take a step back and then we'll get into Q&A around what you love about us that will stay the same. I just want to double down on something about the fact that, the way you bank with us today, the products and services that you have today, from day one won't change. So the terms and conditions, so you've got a fixed rate mortgage, that rate stays the same. You've got a term deposit, that rate stays the same, and then you get the opportunity to talk about that with the merged entity into the future. I'll remind you though, we have to remain competitive. We've had a track record of being competitive. I can't talk more about rates at the moment, but that theme of best of both, remaining competitive, is an absolute commitment from both organisations. And I just want to emphasise our genuine appreciation for all our members coming here and sharing with us what's on their mind. This is what this is all about. We've got other events online because we need to get to all of our members so they have the right to answer questions. Bank Australia will be doing an online event on Monday. We will do our online event in a few weeks' time once the voting opens up, so that all our members get their chance to get their voice across, ask us some questions, in addition to the work we've already done through the Merger Hub, member workshops, etc. So again, really appreciate every single member coming here, and thanks to the team for being here as well. Please join us for refreshments and catch up with us. Thank you.